Hello everyone. Welcome to the Stock Minds web channel. Amphenol Corporation NYSE APH delivered an outstanding third quarter 2025 performance, showing both explosive growth and healthy margins, a combination that's caught investors looking for both growth and value. In this video, we will dive into Amphenol recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Amphenol. Amphenol is an American electronics components company that specializes in connectors, interconnects, fiber optic and coaxial cables, sensors, antennas, and related systems. The firm was founded in 1932 by Arthur J. Schmidt and is headquartered in Wallingford, Connecticut. Over time, it has grown into a major supplier across sectors such as communications, aerospace and defense, automotive, industrial, and data center infrastructure. It operates globally, supplying high-performance interconnect, sensor, and cable products to a wide variety of end markets. Amphenol financial performance. Amphenol Corporation delivered outstanding financial results in the third quarter of 2025, highlighting its strong operational momentum and consistent growth trajectory. The company reported revenue of $6.19 billion for Q3 2025, a substantial 53.37% increase compared to $4.03 billion in Q3 2024. Earnings per share (EPS) also surged impressively, reaching 97 cents this quarter versus 48 cents a year earlier, an increase of 102.08% year over year. On a trailing 12-month TTM basis, revenue climbed to $20.97 billion, up 47.36% from $14.23 billion in the prior year, while TTM EPS rose to $3 from $1.74, representing a 72.4% increase. Free cash flow per share also strengthened, with TTM free cash flow per share rising to $2.79 from $1.78, an impressive 56.74% growth year over year. Profitability metrics remained robust, as the company maintained a gross profit margin of 36.31%, net profit margin of 18.22%, and free cash flow margin of 16.96%. Efficiency ratios further underscored Amphenol's operational excellence, with a return on assets of 14.03%, a return on equity of 34.81%, and a debt-to-equity ratio of 0.64, reflecting a well-balanced capital structure. Over the past 5 years, Amphenol has grown its revenue at a 20.6% CAGR, net income at 27.5%, and free cash flow at 23.3%. The company has been a consistent fast grower, and its growth shows no signs of slowing down as demand for AI infrastructure continues to rise in the coming years. Amphenol Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast continued strength, projecting 2025 revenue of $22.83 billion, a 50% increase from 2024 of $15.22 billion, and a non-GAAP EPS of $3.31, representing a 75.01% increase year over year from $1.89 in 2024. Wall Street analyst sentiment remains bullish, giving a buy rating and an average price target of $144.12, suggesting a 4.97% upside potential, while the most optimistic estimate places the stock as high as $163, implying a potential 18.73% upside from current levels. APH stock price performance and valuation. At the time this video was created, Amphenol stock was trading at $137.29 per share, reflecting an impressive 99.9% gain over the past year, significantly outperforming the S&P 500's 18.2% increase during the same period. Over the last 5 years, Amphenol's stock has surged 386.6%, compared to the S&P 500's 110.4% rise, demonstrating the company's consistent ability to create shareholder value. From a valuation standpoint, Amphenol continues to trade at levels that are justifiable given its robust fundamentals and growth prospects. Amphenol has dividend yield of 0.73%, providing additional return to the stock. The company's price-to-sales PS ratio stands at 7.87 on a trailing 12-month basis and forward PS of 7.26. Its non-GAAP price-to-earnings PE ratio of 46.54 TTM and the forward PE is 41.09, while the price-to-free cash flow PFCF ratio is 47.1. Based on Fiscal.ai data, if we look at the valuation over the past 5 years, the forward PS, forward PE, and PFCF are all above the average. Although the valuation is high, Amphenol still presents an attractive investment opportunity for long-term investors. The company's consistent revenue and profit growth, strategic acquisitions, and exposure to expanding AI technology-driven markets may justify its premium valuation. Amphenol growth potential. Amphenol growth prospect remains strong, driven by several factors. 1. Artificial intelligence and IT datacom market explosion. In Q3 2025, Amphenol's IT datacom segment experienced a remarkable 128% organic sales surge, now comprising about 37% of total revenue. This growth is largely driven by soaring demand for AI infrastructure, with significance placed on high-speed, power, and fiber optic interconnects designed to meet AI's engineering challenges, such as thermal management and signal integrity. Amphenol holds an estimated 33% market share in AI interconnect solutions, positioning it as a dominant player in this niche. CEO Adam Norwitt emphasizes that the company is often the first call for organizations developing next-generation AI systems. Management views this as a long-term structural shift rather than a temporary trend, with AI revolution creating sustained opportunities. Operational agility allowed sales to surpass guidance by a mid-single-digit %, and growth momentum is expected to continue into the future. 2. Strategic acquisition platform driving market expansion. Amphenol's disciplined acquisition strategy significantly fuels its growth. The company agreed to acquire CommScope's Connectivity and Cable Solutions (CCS) business for $10.5 billion, expected to close in Q1 2026. This deal adds roughly $3.6 billion in annual revenue with 26% EBITDA margins, boosting Amphenol's fiber optic interconnect capabilities and expanding its presence in IT datacom and communications infrastructure. Amphenol also agreed to acquire Trexon for $1 billion, closing expected Q4 2025. Trexon, with $290 million projected 2025 sales and 26% EBITDA margin, specializes in high-reliability interconnects for the defense market and will enhance the harsh environment solutions segment. In August 2025, Amphenol bought Rochester Sensors, expanding its industrial sensor portfolio. Strong free cash flow of $1.22 billion in Q3 2025 and $10.9 billion liquidity enable continued acquisition-led growth and portfolio diversification. Recent acquisitions contributed 15% of first-half 2025 revenues with enhanced profitability. 3. Diversified end-market portfolio with broad-based growth. In Q3 2025, Amphenol showcased a robust performance across all major end markets, highlighting its diversified business model. Its communications network segment experienced remarkable 165% growth, driven by demand for interconnect solutions supporting cloud data centers, 5G networks, and telecom infrastructure expansion. The mobile network segment benefited from global 5G deployment, offering antennas and connectors for next-gen wireless systems. The defense market grew 29% in US dollars, driven by military space, naval, and communications demand amid geopolitical tensions. The industrial market shifted to positive growth after 7 quarters of decline, with Q3 posting 12% organic growth and strong European expansion. The automotive segment improved sequentially across regions, harnessing the electrification trend. The harsh environment solutions and interconnect and sensor system segments posted strong double-digit revenue increases, underpinning Amphenol's broad-based secular growth across digitalization, automation, and defense markets. Risks to consider. While Amphenol growth prospects are robust, we should be mindful of potential risks. 1. Industry competition. Amphenol operates in a highly competitive electronic components industry, facing major rivals like TE Connectivity. TE Connectivity, a Swiss industrial technology company, competes closely with Amphenol across automotive, industrial, and communication sectors. This intense competition can result in price pressure, reduced profit margins, and potential loss of market share, challenging Amphenol's growth and profitability in a rapidly evolving market. Monitoring these competitive dynamics is crucial. 2. Acquisition integration risks. Amphenol's growth relies heavily on acquisitions in fast-growing sectors such as AI and aerospace. While these deals have driven significant revenue gains, integrating acquired businesses poses challenges that could delay expected benefits. Additionally, acquisition-related costs and potential share dilution may pressure profit margins and cash flow stability, making smooth execution and careful financial management crucial to sustaining long-term growth and profitability. 3. Market and economic conditions. Fluctuations in demand from key markets like automotive, aerospace, and communications can impact Amphenol's revenue and profits. Economic slowdowns or changes in these sectors, investment levels may reduce orders for Amphenol's products, including cables, sensors, and antennas. The company's performance is closely tied to these industries, making its financial results sensitive to market cycles and developments in technology infrastructure and defense spending. Conclusion: Amphenol demonstrates an exceptional combination of strong financial growth, solid profitability, and reasonable valuation. The company's impressive Q3 2025 performance, consistent cash generation, and leadership in high-demand connectivity markets position it for continued expansion. With a history of outperforming the S&P 500 and consistent rapid growth in key financial metrics, Amphenol remains a compelling investment choice. Despite moderate risks, its growth potential in AI industry and operational excellence make Amphenol an attractive long-term opportunity for investors seeking both value and performance. What do you think about Amphenol? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.